It's Tuesday and it's 10 a.m. in Lagos, Nigeria. That means it's time to do Tuesday business here on Business Morning. Good morning and welcome. I'm Ini John Mecca. I'll be spending the next 55 minutes with you doing serious business. We start off with what's going on in the commodity space. And what's happening there is that wheat edged high on Monday after dropping to a 3-month low in the last session, and soybeans rose for a second session with easing COVID-19 restrictions in China, triggering a broad-based gains in commodity and equities markets. The most active wheat contract on the Chicago Board of Trade climbed 0.4% to $7.63 for a quarter of a bushel. Soybean added 0.3% to $14.43 for a quarter of a bushel, and corn was flat at $6.46 cents at half a bushel. Further easing of COVID-19 testing requirement and quarantine rules in some Chinese cities was met with a mixed relief and worry on Friday, as hundreds of millions await an expected shift in national virus policies after widespread social unrest. We come here to Nigeria as part of efforts to help corporate organizations in the country build resilience against rising global inflation amid future pandemics. Economic think tank Financial Derivatives Company Limited has organized a forum to enable businesses prepare for such uncertainties. Speaking at the event, renowned economist, the Chief Executive Officer of FDC, Mr. Bismarck Rani, highlights some measures that business leaders can take to strengthen their organizations against crisis. On his part, the Managing Director of Flour Mills of Nigeria, Mr. Boyolu Soya, gave his own recommendation.
Resilience, policy resilience, and government resilience all come. The economy is made up of individuals, corporates, government, and investors, right? All of us have to be resilient. Resilience means that you have to dig deep, and bring out the best in you, because human potential is probably more than the actual, right? But human potential can become negative when you're desperate and when things are negative. So we got to change the thought process.
Right now, the biggest thing for us to continue to drive is our agricultural sector as we continue to drive domestic production. That helps in terms of food self-sufficiency. And as we've seen in the crisis, one of the things that has happened is when supply chains get disrupted, you start seeing commodity prices going up. So the more we can actually produce and develop locally, the better for us. The other thing, of course, is whether it's businesses or the country, we need to start looking at how we risk manage ourselves through any of this crisis.
All right, so we do know that conversations have been on this COVID-19. It's not the first pandemic in the world and most likely will not be the last. So that's why you have FTC doing that there. Well, talking about FDC, we do have a conversation with one of the research analysts from FDC, but we'll take a breather and then we'll come back for that conversation. And going to the commodity space, so one of the hottest topics there at this time is oil. It rebounded today after plunging more than 3% in the previous session as the implementation of sanctions on Russia seaborne crude oil eased concerns about oversupply, while relaxing of China's COVID-19 curbs bolstered the demand outlook. Brent crude futures gained 38 cents to $83.06 a barrel, while West Texas Intermediate crude rose 37 cents to $77.29 a barrel. The group of seven set a top price of $60 a barrel on Russian crude, aiming to limit Moscow's ability to finance its war in Ukraine. But Russia has said it will not abide by the measure, even if it has to cut production. The price cap to be enforced by the G7 nations, the European Union, and Australia comes on top of the EU's embargo on imports of Russian crude by sea and similar pledges by the United States, Canada, Japan, and Britain. And we do know that this is one hot topic that has refused to go away, talking about the issue of the cap on Russian oil. But even before now, I do remember that for about a month ago or so, China and India were able to buy Russian oil for between 50 and $60. So one could ask if the price cap of 60 is actually trying to play along, so it's not too difficult to implement. But even that has brought some controversy, of course, as we know that Russia has been kicking very hard against this, and we wonder what China and India are doing at this time. To have that conversation, we have Dumebi Oluwole now in the studio. Hi, Dumebi. Good morning.
Good morning. Good
Are
morning.
you on Russia? Are you on China? Because
I
this
just want the
price
war
cap,
to end.
you just want the one.
I just want the war to end.
Because this issue of price cap, I mean, it's been in the news for months. Now they finally settled for $60. But I mean, even before now, India and China were getting it at about 60, between 50 and $60. So it sounds like maybe the EU or the G7 are just trying to play safe along the line, even though Russia is still kicking against it.
Yeah. So you're right about the G7 still trying to, play it safe somewhat, and that's because they need oil to continue running into the market. They need oil to remain in supply, and Russia is one of the global, the biggest oil exporting countries. So completely shutting Russia's tap is going to be a huge blow to the global economy. It's going to completely disrupt the global oil supply market. And if you remember, the U.S. has been, nudging OPEC to actually increase oil supply. Sometime in the year, it tried to tap from its strategic reserves just to prop up supply and tame
Prices.
tame prices. So what this price cap basically is saying, you can produce your oil, you can supply, but not as much. You're not going to make as much money as you would have with how oil prices have been. Setting a price cap at $60 per barrel while oil prices are at $90 per barrel is shutting them off 30 30
About
dollars, yeah,
30.
about $30 per barrel. But when you look at the fact that Russia is countries like China, India are still going to, patronize Russian oil. It definitely has more of an impact on people, on countries that are not going to be patronizing Russian oil. Why? Because supply is already tight. OPEC has maintained its 2 million barrel per day supply cut. They're not increasing prices, increasing supply anytime soon. Even some analysts are saying that there's some concerns that OPEC might actually decide to cut production further to keep prices at $90 per barrel, because that is the benchmark that the cartel is looking at right now, $90 per barrel, and oil prices actually declined to about 88, to about
Yes, it's
85,
80,
yeah,
yeah.
$80 per barrel.
Yeah,
Sometime,
83 this
yes,
morning.
yes, about $83. So they're trying to nudge it back to $90 per barrel, because that's like a break-even point for both price takers and price followers within the cartel. Now, looking at Russia now, with Russia saying that they're going to that they would rather they'll rather cut oil production. That's another impact on
On
oil
prices,
on
because it's
prices.
going to affect supply that is available in
Exactly,
the global space and
exactly.
subsequently prices.
Exactly. But there are like two key data points that have somewhat propped the EU and G7 countries to institute this cap. So even with the embargo on Russian oil, Russia still generated Russia's revenue from oil was still as high as $17 billion in
Yes,
October. They made a
yes.
lot of money even with the ban.
We're not
And
even talking about gas. Then
exactly.
we have some other minerals.
Exactly. So from oil alone, Russia was able to make as much as $17 billion in just October. Their revenue actually increased by about $1.7 billion. So with that happening, the G7 and EU countries are looking at, oh, oil is still somewhat supporting or financing Russia's financing Russia, to sustain the war, and
The
they're trying
war.
to, cut
And
cut
then
cut
there's
that
also
off.
the plan to wean off gas.
Yes, there's also that plan,
That's going
but
to be more difficult anyway.
exactly, because we're already we're entering into the winter season for them. Although from when we look at gas prices are really high, and
Yes.
countries in the EU have actually tried to slow their demand. Actually, they're trying to manage their demand within this period. So you're seeing things like they're trying to basically manage their demand. They're not consuming as much as they would have. So it's like you're trying to shuffle it, basically trying to manage the
Yeah, I
resources that you
think
have because of
there was a
expectations is
time
going to
in
reduce.
Germany, I know that street lights couldn't
Yes,
be on at
yes, it
some
could at
point,
some
you know,
yeah,
so they were
exactly,
trying to cut demand, anything that will
exactly,
pull on the demand for gas
exactly.
and
And some of these countries have returned to coal as well. They've returned to coal,
yes, there
so
goes the climate change plan.
exactly. So all of these things put together, you see that they're trying to just basically manage their demand. They're also reaching out to other countries like Nigeria to increase their gas supply, just so that they have an alternative, or they have multiple alternatives to Russian gas, considering that they're instituting all of these bans and embargoes and
And
now
you know,
price
we
caps.
just finished COP27 with climate change top on the list.
Yeah.
And yet a lot of these Western countries, developed countries have gone back to coal because of, you know, this war going on in Ukraine to sustain the economy. So it's a contradiction,
I
kind
mean,
of.
it's a contradiction, but it's somewhat like a necessary evil right now. I mean, what are the alternatives right now? We can't clearly transition completely to renewable energy when there's a huge shock to global supply of oil, there's a huge shock to global supply of gas. So even if you want to, the plan was to wean, slowly from these fossil fuels. Now that there's a huge dent to supply and demand is constantly increasing, you have to make do with what you have. So that's exactly, so basically the global economy's hands are tied. These economies, they have to make do with what they
So
have.
where is Nigeria in all of this? Price at 83, which is still more than what we budgeted for in our budget. But obviously what it means is subsidies increasing.
Exactly.
Fuel queues are still out there, at least in
Exactly.
Lagos. I saw someone
Exactly.
on my way to work this morning. And
Exactly.
if NNPC imports, obviously with 80 at 83 and an naira depreciating, that means we are spending more to import.
Exactly.
And those off-takers from the NNPC will also are in there to make business. You
Exactly.
know, so all of this just have a spillover effect.
Exactly. Ini, I mean, maybe you should go into economics analysis at this point. but
I
you're,
guess
you're
because
you're
I
very
live with it. We
spot on.
live with it every day.
Exactly.
So
Exactly.
you don't have to think far. You're seeing it. It's happening to you
You're
every
very
day.
right. I mean, your analysis was very spot on at this point. But just to emphasize, basically, Nigeria is a price taker in all of this, and the fact that we're still net importers of refined petroleum products, whether cooking gas, kerosene, diesel,
Diesel.
PMS, all of these things, because the prices are higher now in the global market, we're definitely going to keep spending more. And the fact that the naira is also depreciating is also going to have a huge impact on it. I mean, although a respite to this is the fact that oil production has actually increased, but
Yeah.
it's still not sufficient enough
But I
for us
think
to
we should
generate a lot of
celebrate
money.
that too.
Except, but
Remember
that's a
when
win.
we were
That's a
producing
win.
less than a
Million,
million?
exactly.
That was heartbreaking.
But now that we have the Forcados terminal, back in operations, alongside other terminals, we're seeing that we're noticing an increase in our domestic production. And if this continues, I mean, it could help us, generate more revenue. But the downside to it is the extremely bloated fuel subsidy payments that we have. The NNPC has still not been able to remit any kobo to the federation account, and that is significantly, hurting our external reserves, is significantly hurting our export earnings, is significantly hurting the government's purse to actually do anything substantial in the economy.
You know, that one good thing out of that would have been for state governments, subnationals, to begin to look inwards, you understand, and look at these commodities that we have everywhere. In every part of the country, we do have one commodity or the other, one mineral resource or the other. Imagine if state government take this as a challenge and say, okay, no oil money, we don't want to depend on that anymore, let's look inwards. I think it would be a bright side to all of this dark story.
Yeah, it would be a bright side to it, but at the same time, we also have to look at all those structural deficiencies that are in place. Even if we want to even if state governments take this up, we have to consider what is currently existing. The landscape is, number one, the state governments are cash strapped. They're not making enough money to actually, embark on some of these ambitious projects. They still depend on FAC disbursements from the federal government. Every month, you see state governors or their representatives reporting to Abuja to get funds to run their states. But if you look at when you look at what's happening globally, several states actually do generate their own revenue. The goal is to be competitive enough as states to attract more investments from private players, to attract investment to your state, to attract businesses to your state. So the core of it all is for policymakers to have the development mindset, to understand that the goal, our responsibility is to make our states or to make the entire country in general business friendly. So you can't have a situation where, look at the situation that happened with Kogi State and Dangote Cement. Boa had to release a statement to say, "Oh, this is happening. We have land there, but all of this happening. Are we sure we're even going to, push through with our own
So
investments?"
that
So
is a scary factor for other
for
investors.
other investors, so state governments and policymakers in general have to come to that place where they need to understand the fact that our role is to create an enabling business environment. The government's role is not to create jobs. It's not that's not the work of the government. That's not the role of the government. The role of the government is to create an enabling environment for businesses to thrive, for businesses to come in. When there are more businesses, we're going to see an increase in output. We'll see an increase in employment opportunities. We'll see an increase in total factor productivity. Why? Because people are enabled, and Nigeria has vast resources.
Maybe when we've had a lot of states holding summits, I'm sure you've been following it.
Yes.
Now it's becoming like a trend. So these states have their own summit, and they get investors together. They have long hours of conversations. One would expect that after one summit, we would see the result of, because I believe there should be results. I mean, all those things you're saying, they are the conversations that have been had over and over again in this summit and some other fora. But what about the implementation of
Yes.
it? We're
Yes.
still waiting for
Yes,
that.
that's where the pipeline always gets clogged when it comes to the policy environment with both at the federal level, at the state level, and even at the local level. Investors come around, but when it comes to implementation, there's a huge question mark around it. Even when some of these policies are implemented, when it comes to the monitoring of this project, to ensure that either funds that have been disbursed or people that have been given the responsibility to take up this project, the monitoring aspect of it for efficiency, for making sure that the goal is actually achieved, we end up seeing question marks as well there. So it's just a huge dough ball that we need to ensure that we get the outcomes that we're really looking out
Okay,
for.
well, let's hope that politics is also in the air. The
Exactly.
new administration will look that way.
Yes,
But
yes.
maybe just before you go, what's going on in the commodity space?
Well, generally, we're seeing prices slow. General commodity prices slow down, and that's because of the harvest season. Although the harvest is not as bumper, we know what has happened like 2 months ago, with the flooding, how that has capped a lot of our harvest. But we're seeing some commodity prices slow down. But commodities like pepper, tomatoes, their prices are really high. And as we enter into the festive season, typical price hikes combined with an increase in consumer demand, with lower harvest yields, would definitely keep prices high, and this will continue to weigh on consumer disposable income, because people are not exactly receiving an increase in their wages just yet to or at least an increase in their wages compared to the increase in inflation rate, to help them mitigate against the increase in prices.
Yeah, and it doesn't look like inflation is tapering anytime soon, at
Yes.
least not in Nigeria.
Yeah.
Although we saw Kenya yesterday, they had
Mm.
a taper in their inflation. But anyway, thank you so much. Maybe we'll talk to you again on Thursday,
Yeah.
God's grace, and we'll have update by then.
Yes.
Enjoy the
Thank you
rest of
very
your day.
much. Thank you.
All right, let's take a breather. We'll be back here on Business Morning, and it's on Channels Television. You're welcome back. Still watching Business Morning here on Channels Television. Well, the Central Bank of Nigeria's intervention funds to the private sector is up to 4.8 trillion naira as of November 2022. And although this has received some knocks, some Nigerians believe this is feeding also into the inflation. But the CBN disbursed 1.33 billion naira under the Agri-Business Small and Medium Enterprises Investment Scheme. Cumulative disbursement is now at 150.22 billion naira. Under the Micro, Small and Medium Enterprise Development Fund, the Apex Bank disbursed 10 million naira between September and October 2022, bringing the cumulative disbursement to 96.08 billion naira. Some have said this much money should have more impact on the economy, or is it even accessible? Well, we have a representative of a company that's a beneficiary of one of the Central Bank of Nigeria's intervention fund, Nina Ogu. She's an SME consultant and a management board member of Enterprise Development Center, Pan Atlantic University in Lagos, even though she's joining us outside Lagos. Hi, Nina. Good morning.
Morning, Ini.
Good to have you. Sometimes, especially after the MPC, when the central bank governor rules out the numbers of intervention funds and the amount spent, a lot of Nigerians just question who really gets it. Thankfully, we're able to get you. Tell us, how were you able to access that CBN intervention?
Well, let me first of all say that I agree with you that people have benefited from the funds. I mean, it's on record that as of today, we have over 35,000 MSMEs access the Maximize Fund. Okay, but it has its own challenges. From us at the Enterprise Development Center, working in collaboration with other consultants that we work with, it has a process. And then the process is actually where you could record the impact and the effect it has on MSMEs. So we're able to do that because, of course, knowing from where we are coming from, the ADC of the Pan Atlantic University, working with various consultants, the standard is top. We're able to take through this MSMEs training, you know, basically an intensive one, and of course, a one-on-one consultation with them to take them through all the processes that they need to be able to access these funds. Okay, but it might not be that it's 100% success, but I give it to federal government of Nigeria that it was also good, even though it came with its own challenges too, which we would talk about as we talk about the project itself.
Yeah, so
Okay.
because some people even kind of don't believe that this monies actually get out to the people. So when they give you this aid, does it come like in cash? Does it come in bulk? Does it come in non-cash? Do they help you to manage it, sink it into your business, and then watch and see the impact of it?
So that is where the challenge really is. Not just that they don't want you to, I mean, they don't follow up to see the impact, but they've also equipped the consultants, that is the BDSPs as we call them, with some sort of funds to be able to, as a buffer, to help them follow up on these MSMEs. Okay, but having said that, honestly speaking, the dispatch rate is really, really very, very low. I can tell you for that as a fact that out of this 35,000, it looks as if it's a quota system. That I want to go straight to that one, which is also acceptable, or in some cases not acceptable, because you find out that in some parts of the geopolitical zones, it's as if the funds go more to there. I mean, coming from us that are from the south, for very few EDIs that have gotten their SMEs get this facility is a tug of war. Okay, but that does not rule out the fact that people are assessing and they are still assessing, and the impact is there. But the fact is, the mechanism that is used in being to assess these funds, the standards, the fact that it goes to the wrong hands. I can tell you that one for sure. From some aspect, it goes to the wrong hands in terms of the accessibility. But there's some good, I mean, the intervention has also been a very positive one, I must tell you, because at least people have access to long-term finance. There's a lot of increased productivity. I mean, like for instance, the price of net rice production has gone very, very, very high. And they've actually facilitated some sort of sustainable agricultural practice development that has increased agri value chain. But the modality of disbursing, ensuring that people really use these funds for what is supposed to be. And one other challenge that we are seeing, which I really would use this medium to talk to the government, is to see how there could be a collaboration with the regulatory bodies. I give you an instance, and NAFTA. So people access this money, it takes a long time to come, we get collateral for them. And having even gotten these funds, which could come in terms of the facility, it could also be matching fund, it could also be the fact that, especially like the Axprice one, which you really would have to open a national microfinance bank account, and they can create that account and they help you source even for the vendors that would supply you some of these machineries that you need to support your business. But at the same time, it's also very sad that having even gotten that, the disbursement of the funds is good, but the fact that the usage, so if I am a small business trying to set up, to get NAFDA certification is like as if I'm going to, the bottleneck is just too much. So you find out that having gotten that fund, I will not be able to use it because the accessibility, the channeling that fund into what I am meant to use it to channel it is always a challenge. So it's high time that the government will also speak to some of the regulatory bodies to find out how can we have some collaborative mechanism, some sort of understanding that try to cushion the some of the requirements that the small businesses would need to be able to make very good use of those funds. Ini?
Yeah. So, I mean, if we also look at it from the government's perspective, obviously there are needs to put in check measures so that there's
I
no
agree with you.
abuse. From your perspective and what you have experienced, how do you think a balance can be put so that the government is not just, even though you did say it still gets into the wrong hands, but where do you see a balance between finding a way to ensure that this works right without being abused and still making it at least on the average accessible to MSMEs? Because SMEs, a lot of SMEs do not have the financial strength or the strength to go further and do all of those bureaucracy and meet up with all of that, as you have already noted. Where can we find a meeting point?
The federal government already solved that issue by trying to standardize the process of business development service providers in Nigeria, which is why I really want to focus on. In the past 1 year now, both the 32 certifying bodies, Enterprise Development Center in charge of the South, and then the Kaduna Business School in charge of the North, has actually have passed, accredited, certified over 200 consultants that are equipped to ensure that these MSMEs, understand what the fund is all about, go through this program and able to handhold them, make sure that the fund is disbursed, is used for that which they're supposed to do. Instead of having, I'm not trying to undertalk some of the bodies managing that, but they can also work hand in hand with this MSMEs. Why don't you just look at that? They have all these consultants on their website. Find out across the region, and they are cut across the region. Let's look at those ones that you can work with. Give them that enabling environment to be able to do that, which they already have the expertise to do. So because these MSMEs need someone that would sort of apply both mentoring, coaching, and take them through the process of just getting that fund. So it's not just like it's a national cake. Let me go and get my own. I mean, like we have even during the Well, during I think it was Apple Borrowers Bill that you have some MSMEs, they'll just come and stand in front of their rice field. They say stand there and they'll count their name and they'll give them funds without even knowing that they're meant to pay back that fund, without even knowing the exact usage of that fund. So back to what I talked about the quota system, or where you see some influential, top influential government bodies, officials trying to say, okay, I want this, I need this number, this must happen, and set some sort of a mushroom EDI, so to say, and then say, okay, these are the people that we've trained, and let's get them access this facility. So the moment the government realized that you already have a body that you have certified, that you have taken through to go through a process that are more than 250 as I speak, cut across all the geopolitical zone, then work with SMIDAM, of course. SMIDAM is the regulatory body in charge of all this, and the two sectors, and see how you can use this very good seasoned experts to make sure that the MSMEs understand what they are doing and the loan is being applied. Even if it means you're giving them a stipend or some sort of facility encouragement to make sure that they do their work. But it's high time we use them to be able to help these old SMEs understand really what the fund is all about, what is meant to for you, how I can access them, and then the usage too. And then it could also be that they don't even need the funds. But the consultant will, working with them, will be able to identify really this is what is accepted and this is what is accepted and this is what they can use it and this is not what they can use it for. So for me, it's about having that environment, making sure that there's a handshake between these consultants, the government, and then the MSMEs. If you don't deploy that, honestly speaking, you will always record, not that it won't be 100% waste, but you always record the fact that the funds will never be channeled, it will never be as successful as it is. I am not ruling out the fact that, of course, there are success stories that we would like to share, but really, it's just what should be done to make sure that this is sustained and there's growth, and then the GDP, as we are contributing to that IGR and the GDP using the MSMEs.
Yeah, well, just before we let you go, and briefly, please, Nena, the MSMEs themselves or the SMEs, are they really interested? Because we do know in Nigeria, it seems when information comes from the government, a lot of Nigerians do not really trust that information, especially when it sounds too good to be true. How much of interest and efforts do the SMEs even put to even access it and maybe try to get their voices heard, to say, like, these observations you've made, let's try and get it across to CBN and say, these are the challenges we are facing. Can you tweak this or tweak that to make it better?
Okay, so I am very certain, like I use myself as an example, the Enterprise Development Center. We have an advocacy group. I can say that we've passed out more than over 10,000 MSMEs that have gone through the institution. That they have a voice of their own. But the fact still remains that how do we get them investment fund ready to be able to even know that they qualify for those funds? About readiness, yes, some are ready. I mean, if you take the toll of those that are ready, I will tell you that on a score of 1 to 10, 7 out of every 10 MSMEs will tell you that they are ready. But then, how do you now assess and ensure that they are really ready and they need those funds and they know where to get it? That is where the consultants come in to make their own stake, to come and say that really, as a certified consultant, as a consultant that have done this over the years, have assessed these funds, I should be able to work with these MSMEs to know. Yes, communication still is a major challenge in the country, if me. I mean, it's a three-way thing, but I can tell you for sure that they are eager and they really want to access this fund. But the fact is, how, where, and then do they really know what the usage of that fund and the type of funds that they're able to get? Because accessing a wrong funds is also a big issue.
All right, Nena, thank you so much for sharing your experience with us. And we do believe that this is getting to the right quarters, especially in this case, the Central Bank of Nigeria, making that intervention fund more impactful. Nena Ugo is an SME consultant and a beneficiary of one of the CBN intervention funds. Thank you so much, Nena.
Thank you so much, Ini. Thank you.
All right, now, so let's go to the market and see how we traded yesterday, starting with the equities market yesterday. That's it's not the equities market. So starting with the equities market yesterday, we saw that the market continued that rebound. It started on Friday, even though it doesn't look as attractive as it did on Friday. On Friday, the market was more than 1% up. But yesterday it was 0.24%. And thanks to corporates like Boa Cement and all of that, they led the market up. And looking at the activity chart, is the mixture there. Volume was really high yesterday, about 300% more than it was on Friday at 645, more than 645 million, while value was in the red, 4.19 billion. Deals was slightly higher than what it was on yesterday, on Friday, I beg your pardon. Then sectoral performance, banking, my favorite, unfortunately was in the red yesterday. Why not? I think corporate like Zenith and all that were down. Consumer goods in the green, 0.63%. Industrial goods did really well yesterday. Boa Cement, I believe, 1.66%. Insurance also, as well as oil and gas. Looking at the smaller NASD OTC market, we see that it was also green yesterday, more than 1%, even though they haven't regained that 1 trillion naira, which seems to be a level, a constant level that they've been sticking to for a bit there. 945, getting close there. Hopefully it will rebound. And when we see the deals, just 12 of them, stocks traded with 3, and the value was 2.6 million. That's how the week started for the unlisted market yesterday. Now going to the fixed income market, the money market there, for the treasury bills, we had one deal yesterday, but one deal worth 100 million naira yesterday. Looking at the federal government bonds, we had 14 deals yesterday worth more than 5 billion naira. And then we do have a primary market auction coming up in a couple of days, I think on Wednesday, and it's going to be worth over 54 billion naira at the Treasury bills market. Let's talk to Senator Audu. He's a fixed income trader with Access Bank, and see if he can predict the future and tell us how that market might close and what difference it may make to the market by the time we're reporting it. Hi, Senator. Good morning.
Hi, Ini. Good morning. Thanks for having me.
Yeah, good to meet. So when we see how the market has been faring, looking at the yield environment in the last couple of days, weeks, and of course the policies that drive it, the MPC and all of that, how do you see this auction? How do you see it panning out?
Okay, thanks. So as rightly said, there's an auction holding tomorrow. The amount on offer is about 54.36 billion across the standard maturities, the 91, 182, and 364-day maturities. The bulk of the offer is coming on the 1 year, the 364-day maturity. That's about 51 billion. So with regards to your question about how we expect it to play out, a new calendar was recently released for the next quarter from December, and there will be 3 auctions this month. The total amount on offer on all 3, the total across all 3 auctions, about 135 billion. Given the relatively small size of the amount on offer, we expect the DMO to have some bargaining power. So we expect the stop rate to trend downward, particularly on the 1 year. At the previous auction 2 weeks ago, it closed at 14.84% for the 364-day maturity. But we've since seen the bill issued then, the 23 November 2023 security trade at sub 13% levels, close to 12%. So we expect that downward trend to reflect in the primary market tomorrow, as we expect market participants to bid a bit lower at the auction tomorrow.
All right, so we've seen a lot of factors affecting markets at this time. Top of that is the elections and investor sentiment, sometimes uncertainty. And then, of course, we have the continuous trending of inflation and the response of the CBN, not just the CBN. I mean, a lot of countries are doing that. Do we see this environment still attractive as the year gets to an end?
So on the treasury bill side as well as the bond side, we've seen the yields increase to reflect the increased inflation figures, like you said, as well as to reflect the economic condition that we're currently experiencing. So we've seen yields on treasury bills, like I said, trend upwards from historic low levels last year. We saw rates as low as 5% last year. We've seen those rates trend to above 14% for treasury bills. For bonds, we've seen the long tenured bonds. There's a bond auction next week. We've seen the longest maturity being issued at that auction, the 2037, trade at above 16%. At the auction, it closed at 16.2. We've seen it trade just slightly below 15% levels. So with regards to your question about the attractiveness, we've seen that these yields have, there has been some encouragement to investors to at least come in and offset some of the losses they may have gained on the inflation side. So we've seen that interest across the treasury bills and the bonds market.
Well, that gives us a little bit of hope. At least there's some place that the investors can hedge. And we do hope that it stays that way, even as we get close to the February election. Thank you so much, Senator Audu, a fixed income trader with Access Bank. Have a profitable business there, as I always like to say.
Thank you.
All right, let's see there. It's the federal government bonds, as I said earlier, 14 deals. And hopefully by Thursday, when we'll be reporting this market, it will be more active than this, you know, because after tomorrow's auction, then by Thursday, when we're bringing you up the report, then we should have more activities. We look forward to that. Ladi is just around the corner, but we need to take a breather when we come back. Then it will be time for crypto. So we head to another market. Now, that's a crypto market, and Ladi is here to do us the honors. Hi, Ladi.
Hi.
Good morning. So you did say that I've come back with my good luck.
Well,
so I believe Bitcoin is 50 now.
It's still
it's
quite
50.
shaky. Still trying to hold on to 17,000.
Just hold. Imagine Bitcoin that was 60, about 65,000.
Exactly, yeah.
Last December, I believe.
Yeah.
Less than a year ago.
All the way down.
17.
Exactly.
But there's hope.
We know why.
But there's hope.
Well, hopefully, you know,
hopefully
with these markets, you cannot, you know, predict these cycles. They come, but somehow.
So if you have the heart, then you plunge in.
Exactly, if you have the heart for it, because all markets now, no market is safe really, except maybe you're in oil. Maybe
if you're in oil or currency.
You know, wheat or maybe in the dollar, then obviously you're doing just fine.
Then you'll be doing well. Exactly. All right, Ladi, I'll just yield the floor to you.
All right, let's look at the sentiment in the markets. It's fear this morning, 25 points, much better than what we had yesterday. Let's flip over to the market cap, $853.86 billion, down 1.74%. We're seeing volume traded up 5.62% this morning. We see Bitcoin dominance 38.31%. Let's look at the price of Bitcoin this morning, trying to hold on to that 17,000 level, down 1.69%. This might not hold at this point. We're looking at the next support level about $16,800. If this doesn't hold, it doesn't start some kind of upward correction. And we see the 24-hour volume traded in Bitcoin, $19.60 billion. Let's look at the price of Ethereum, $1,267, up 5.21%. Volume traded $5.55 billion for Ethereum this morning. Let's look at the top odds per market cap. It's all red. Each one down about 2% this morning. BNB, $289, down 2.33%. And we see XRP there, 38 cents. Holding on to that 38 cents level. Might see some more correction downward. It's down 2.13% this morning. Let's bring in Olumide Additional now, financial market analyst. Hello, Olumide. Hello, Olumide. All right, we'll try and get Olumide back now. Let's see the Cardano there. That's also trading down 2.2% down. And we see Axie Infinity. This one's topping the gainers counter this morning, up 18.52%. We know Axie Infinity had a good run, you know, last year when we had those metaverse game tokens there, taking the market up. the last time. We see SNX also on the top, Guinness counter up 7.37%. Let's try and get Olumide additional again. Hello, Olumide. Good morning.
Yeah, hello, Ladi. Good morning. Thanks for having me.
Good morning, Olumide. So we're seeing Bitcoin there holding on to that 17K level. Doesn't look like it might hold, the way it's looking. And we're seeing the next support level about 16,800. How are you seeing the market?
Yeah, just like you rightly retweeted, I think I share same sentiments here because if you look at what is happening to the US dollar right now, you see that it gained roughly about 8%, and that was because of the surprise service sector data coming from the world largest economy, telling you that the US economy still remains resilient, and you understand that that will give the US Fed the attribute to increase more interest rates, and that's bad for the crypto market. Also, the stagnant Bitcoin dominance for a couple of weeks tells you the exodus of investors across different assets, despite the fact we are seeing price action suggesting that the bulls are still holding on around the 17,000 support level. But I think key things are clear. According to Standard Chartered, market analysts even recommend that Bitcoin could fall as low as 5,000, and that's because we are seeing outflows of investments away from the crypto market. We've seen troubled firms filing for bankruptcy. We're also seeing dynamic and systemic important firms also cutting forces, cutting workforce. Companies like Bybit, companies like Coinbase, companies like Kraken. These are important companies. They are reducing costs based on the crypto winter anticipation going longer than anticipated. So these things weighing on investors' sentiment, and that is why it's unlikely for Bitcoin to break above that in the nearest future, Ladi.
Right, quite a tough time for most of these assets, and obviously all eyes on the Fed for the next meeting. Is it going to be 50 basis points or 75? Watching out for that. But that obviously impacts this market. Thank you so much. Olumide Additional.
Thank you.
All right, so looking at the top gainers there, we see Arweave there, 1.93% up. Let's look at the top losers counter. We see Kronos there, 6 cents, down 9.90%. So it's single-digit losses we're seeing. And Sheep there, also down 4.32%. I know Ini likes Sheep a lot, and we're seeing that on the losers counter this morning.
Yeah, well, it's so red. I mean, it's just so red, even though they are single digits, but
yeah, it's really red. Yeah.
It's really red.
It's expected with these markets at this time, as I said before.
And as you said, the Fed they're getting ready to do their thing again.
The next one.
Yeah, we see markets will be reacting before the decision is even taken. And afterwards. Well, thank you so much, Ladi. Yeah, well, I guess that's why we always say that. I mean, you want to get into any market, you have to know about it.
Oh, yes.
And know the risks that are before you.
Get a financial advisor or something.
Exactly. Thank you so much, Ladi. See you at 1:30.
See ya.
All right, so that's it on the program for this morning. Thank you so much for being a part of Business Morning. 55 minutes of relevant and current business conversation. We'll do it again tomorrow. But before tomorrow, I'll see you tonight at 10 p.m. for the Stock Market Report. I'm Ini John Mekwa. Have a profitable business day.